कहाँ से आया किसका है ये, खाली बिल्ली किसी के पास पड़ता है, कोई यहाँ कड़ का है। वो जितना ज्यादा उतनी ज्यादा जमाना सारा ये इज्जत तेरी करता है, वरना तू अपने घर का है। खाते पैसा है तो बड़ी 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 बातें, पैसा है तो लंबी 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 रातें, पैसा है तो 5 स्टार सारी मुल्ला।
Hi, welcome to our first class of Zaxis Basic to Advanced Stock Market Basic to Advanced. Like many of you requested that we don't know what is the option, future or derivatives. So we came up with the plan so that you can all understand what is the option, or before that what is the stock market actually. So our first thing today is that suppose for example you have to purchase the Infosys share. Suppose for Infosys share it is up to 1600 rupees. Just for example. For example, Infosys share is of 1600 rupees. And in future, you have the analysis that Infosys share can goes up to the 2000 rupees. You can make the profit of 400 rupees on this. That if you are purchased today of 1600 and tomorrow it will go to the 2000 as per your analysis, you can book the profit of 400 rupees on this. But suppose today you don't have the 1600 to purchase that whole share. So what is the options we have actually? So here comes the options in market. It is the derivative. So instead of purchasing 1600 Infosys share, what you purchase? You will purchase option. What is option? Option is the derivative. How it is derivative? It's derive its value from the Infosys share. So how it will be written as? It will written as 1600 Infi and CE. So CE means call option. Okay. So in this, in future, 1600 price of Infosys share, if it is going to 1700 or 1800 and 1900. Okay. So this is the price of Infosys call option today. It's costs up to 100 rupees. So once the price of Infosys share goes to 1700, this call option will rise up to the, for example, 120 rupees. If it is going to 100 or 1800, it will goes up to the 140. Same way, once it reaches to the 2000, it will goes to the 180. Okay. So that's how you are not exactly purchasing the Infosys share, but you are purchasing it option. So what is the benefit of purchasing it? As we have discussed in our first, that today if you don't have 1600, so you are able to purchase that within 100 rupees. And once it reaches to the 2000 rupees, you are able to book profit of 100 rupees. So almost 80% you can book the profit on that. So this is called as call option. It is CE. We have put option also. Again, if we take the same example of Infosys of 1600. Okay. With your analysis, you have assumed, or with your analysis, you have strategized that 1600 share of Infosys by next month or by next week, it will going down to 1000 rupees. This is your assumption. Okay. So what you will do in this case, you will purchase Infi 1600 put option, and it is called as PE. PE and CE. Okay. So as we have already discussed, its price will go up to 1500, then 1400, and the same way to 1000. Okay. So we have purchased 1600 put for 100 rupees. So as the market is moving in your condition, it means from our side that we have purchased the put. So we are bearish on this stock price that it is going down actually. So once it reaches 2000, the price may go 120, 140, 160, and again 180 once the price is 1000. Okay. So at what price you have purchased? You have purchased at 100 rupees. Okay. And you are able to sold at 180. So you are again making the profit of 80% on the same from put side also. So this is your call option and this is your put option. Like if market is going up, you have to purchase, or you are bullish, or you are assuming, or your analysis is showing that stock price is going up. So you are purchasing the call option, and your analysis is showing that the price of that particular stock is going down, or you are bearish on that. You are purchasing the put option. Okay. So these are the two types from the call and put side. Okay. Then we have seen only buyers here. Okay. Like call buyer and put buyer. Okay. But if you are buying something, like we have only seen here the analysis of buyers, like how buyers are making the profits and how buyers are purchasing that. But we should have seller also here, like call seller and put seller. Okay. So they are selling that. And in a market words, we can call it as call writer and put writer. These are same thing. Okay. Call writer or call seller, put writer or put writer. For example, again we will take the same example of Infosys share of 1600. Now we will take both example in one go. So who is call seller or call writer here? Okay. So person who is bearish on this call or bearish side on his Infosys share, who is assuming that price will goes down to 100, okay, in 1 week or 2 weeks. So what he will do? He will sell in fee 1600, okay, call. He will sell that, okay. And how much price he will take to sell it? It took almost 1 lakh or 1.5 lakh to sell that. Okay, so this is the first thing for the seller side, because he is seller or call writer. So he will say that because he is bearish on that price, that it will go down. So for example, just for example, he sell that in 1000 rupees. Okay, 1000 rupees. He sell that call option. Okay, and we have buyer also. So what is buyer is doing? Buyer is purchasing that from 100 rupees. So this is mismatch, right? That he has to sell that at 1000 rupees and buyer has to just pay 100 rupees to just buy that call option. Just now we have saw that. Okay. So why this differentiate is? So when call buyer or buyer is purchasing something, we can call it as premium price. That he's paying the premium only. Premium. Okay. What is premium? It's just like a booking amount or a coupon amount. So for this, I will take a very classic example. Uh, okay. So for 31st is coming actually. So for 31st, if we have to book a taxi actually for going Pune to Mumbai, and taxi is a pricing today 1000 rupees. I will take all example using this thing, that we are booking a taxi, and for taxi today's price is 1000 rupees. Okay, and you have to just as a buyer, you are booking that booking amount is 10%. So you are booking that using 100 rupees. Okay. So what is the price of that service? Taxi has to pay 1,000 rupees. But you are booking that because you are booking that in advance actually. Like today, 16 December, you are booking your services for 31st December. Okay. 31st December, you are booking that. So you have to pay only 100 rupees today. Let's suppose from tomorrow that in Mumbai there is many rush for the 31st parties is going on actually. Like many people wants to go Mumbai actually. So definitely the taxi prices will be increased. Let's suppose tomorrow that taxi prices here will increase to 2,000 rupees. Okay. So definitely booking amount will be same at 10 percentage. But buyer has to pay 200 rupees. Okay. So tomorrow, like today is 16 December, and I will mark here 22nd December. So on 16 December, price for Pune to Mumbai taxi is 100,000 rupees, and buyer has to pay 10% of the booking amount, which is 100. On 22nd, due to many rush or the 31st party or something, that that taxi fare increased to 2,000 rupees. Then again, same buyer has to pay 10 booking amount of 10%, which is 2,000, and booking amount is 200 rupees only. So what will this buyer will do here? He has already paid 100 rupees to this taxi service provider, and now his price goes up to the 200 rupees. Okay, so he has in profit actually because 1,000 rupees service he's still getting in 100 rupees. And if the price is going again to 2,000, still he is able to make that in 100 rupees. So once he will done his fare actually, so he has to pay only remaining 1,900 rupees to the taxi driver. But again, the second buyer who has make his call on 2,000 rupees paid on 200. So he has to pay remaining 1,800 actually. So these are all buyers actually, or we can call it as options buyer. And that's why they are paying only premium amount in our stock market. Or here we can call it as only 10% or whatever the amount. So it is clear that why buyers has to pay very less amount to buy something and seller has to pay a hefty amount of money to sell something because that taxi driver is selling their services for 1,000 rupees. So 1,000 he has to pay that amount. That is 1,000 rupees service, 2,000 rupees services. Okay, so that is the seller actually, and these are the buyers, and they are paying only 10% amount or only the premium amount as per our stock market concept. So I will give you the 4 boxes here, which will clearly indicate call, put. That is call means market is going up, put means market is going down, and we have buyer and we have seller. So only these 4 concepts are there under options. This is big O is option. Then these are the basics actually that we are from how buyers are making the profit, how sellers are making the profit. So for next 3 days, which is our premium classes, and we have started the Z access for this concept only, so that all the beginner or the basic learner they can understand from where buyers are making the profits, how sellers are running the stock market actually. So stock markets are mostly run by the sellers actually, not from the buyer side. So all these basic concept we will take in our next 3-day classes in Z access. And in that we will provide our premium Telegram group link also. So in Telegram we provided daily 3 to 4 trades as well. So that using that trades you can earn up to daily 500 or 1,000 as per the positions you are taking actually. In our class you will get the strategy of price action. Then what is price action? Just now we have saw how the number of sellers are there, number of buyers are there, then where sellers are taking the action, then how the candlestick patterns are formed, what is the volume actually. Like at particular price, you will see volumes are very more. Like just now we have saw, if some premium cab service provider like Ola, if we take the example, like we have two options, like either you can book Ola or Uber, but Ola is giving you very premium services to go from Pune to Mumbai. So obviously we will go for Ola actually. We will book continuously Ola, not Uber. So in same condition, if we have 20, for example, 25,800 and 25,900, and many buyers are there on 25,800. So you will also go for the 25,800 call option or put option. Depends. So this is the volumes actually. So that many of the times on an expiry day, you can see that why only particular strike price. This is called as the strike price. Why only particular strike price go from 10 rupees to 100 rupees or 20 to 200. We have saw in our Instagram reel or YouTube also. It not happen for all the strike price. It's happen for particular strike price. So it depends on the volumes actually. Then third thing we should come first actually. It is basic to advanced. So in basic to advanced, what you will run? You will run what are the derivatives, like options is there, futures are there. Then two more are there, forwards and swaps. So these are not relevant to our market. Relevant to our market is only options, option and future. So all these topics will cover entirely in our classes actually, so that whatever the signals or trades that we are providing in our Telegram channel, you will able to understand all this. Then you will understand what are targets. SL means stop loss. What is the stop loss? Then sixth and most important is risk mitigation. Risk mitigation means where to buy, where to sell, and if our stop loss, in what condition our stop loss should hit, and in what condition we have to average that. So all these things we can get in our risk mitigation. Then your capital. For example, you are trading with 20K or 50K or 1 lakh. Then what should be your max to max risk mitigation or stop loss on that? So all these things you are get in our next 3-day classes actually. So that's it from my side. Thanks for joining. Any doubts or anything, you can just comment actually.